Good evening, traders. This is Captain Jim James with your daily brief. I think I have to do them quite frequently for the rest of the week. I'm surprised that on Thanksgiving week that's the case, but so be it. We'll do it live, right? As one of those old guys said. I was going to do a daily brief for tonight for what's going to happen tomorrow, but I thought it would be better to touch on a subject that's similar to asking someone who's been trading a while, what's the difference between a share and a stock? And I think off the cuff, you'd be surprised at the answers you get from people that know what they're doing or think they know what they're doing. And so I think that is important to how today played out. Today's market was actually very stable. And a lot of seasoned traders knew how to trade today. Even more, yesterday was really rough, or the day before, which was what, Monday? Oh no, wait a minute. Yeah, Monday was a tough day to trade if you were a seasoned trader. You'll probably hear bears say they got the leg up on Monday. I know that's not the case. I was active in some places with many seasoned traders on both sides that were caught off guard. So, but today or Tuesday was a very stable market, and I even though it went down, it was stable. Monday was a very weird, tough trade because there were a lot of bears that shorted this market right at open. There were a lot of bulls that didn't trade the market right at open. Monday looked like a trend day. And when you see what happened on Monday at that time of the day, it was very unusual. It happens a few times a year, but sometimes you'll see it happen and it'll come right back in like 20 minutes. You can't panic. I think even in a video earlier in the week I said, there may be a drop and don't panic. There'll be a moment for you to get out of your positions or take it long to save your ass or whatever. And that actually, I think that was a video or two ago on the main regular channel. So my point is this, is that we're going to go right down to the open of a day and how the day begins and where it can go. But on a macro level, we're going to look at what a year is or an event, right? A mass event. So we had an event in 2020. We had the COVID crisis or whatever, right? Dump here. And it was pretty fucking doom and gloom. Like when this happened back here, we knew we were topping back here. And when it did finally dump, I remember when we were really down low down here that it was ugly. I mean, it was ugly. You had like hardcore bears making, I remember some bears were making like, I don't know, literally like $1,000 turned into 50,000. 20,000 then turned into 100,000. I mean, you're talking bank millionaires, small-time retail traders. And when the announcement was made down here, no one believed it. Bears lost fortunes. I know they did. I know some of them. And it was like being slapped across the face. Now, what's important about that is we were slapped back into a trend. And this trend has continued we had 2 years, right? We're coming into the end of this year. We've had a trend of 2 years in a channel. So what you want to understand is that on a macro level, we trade in a channel, in a trend. It's up, it's sideways, it could be down. A good example of a stock that trades sideways sometimes is Amazon. I think it was, I want to say for the last year or so, they had a defined trading channel. You'll see stocks that only trend flat and make a move every once in a while. And so on a grand scale, you can go grander than this. You can go in these super cycles. You can go in cycles that are 5 years. But if you're going like a year cycle, right? Just keeping it simple. You know that you're in this trend, like you break into this trend here in March, right? And you're starting to make yourself a trend. And then there's questions if we're going to keep trending up here in 2021, right? And then the next question is, are we going to trend like this in 2022? So you have to start asking yourself questions, right? What's the outlook for 2022? You're going to hear news people tell you, you're going to hear the market tell you, you know, people lying to you, you have narratives. And there's this old trader adage that you trade wherever it's at until it doesn't work anymore. So you trade this down until it doesn't work. And then when it starts to turn, you take this trade and you trade it until it doesn't work anymore. And that does apply on a grand scale to where we are right now. Now, there are other factors on a very simple, basic level, and that is you have to think from where a bank comes from. Now, you'll see this on a better scale on stocks. If they're an IPO, if you don't know, like I try to trade one stock at a time. You want to get to know that stock, ask people about it. You want to know on a grand scale, are they in a growth phase? Are they an IPO? How are their earnings, right? How are their P's trading? You know, how many times over their profit are they trading? Anyways, it's things you want to learn about a stock, right? But in a stock on a smaller scale, they'll usually trend over the course of a year. You'll see stocks typically go up for a year or 9 months or so, and then they'll call profits, and the stock will downtrend for 9 months or so, and then they'll call profits. The banks will call profits that way too, and then they'll buy again, right? And the stock will go back up. You've got that up, down on a larger scale. Now that's supposed to happen on the SPY, right? But the SPY is built to track the best performing companies in our stock market. It's built to go up. That's what it does. That's its job. It's not built to go down. If the SPY starts to go down, it infers that the market is very unhealthy in general, that the best companies are unhealthy. So SPY can roll over here. It might not roll over here, but you have to trade what's in front of you. So on a grand scale, let's say you were a swing trader that trades a stock or an option for 1 to 3 months, right? You're going to be looking on this large scale here and say, well, I buy here, I buy here, I buy here, here, right? Let's say I hold an option or a spread option package for 1 to 3 months. They've tended to win for 2 years. And even prior to this, in horrible years, they tend to win. They don't tend to trade a lot. They're not on Twitter. They're not on YouTube. They're setting price alerts in this trend and saying, when it hits this, I'm going to start to go long. And this is the scale that they use. Now, this scale, right, is predictable. So you're looking for certain things to happen in this trend channel. And even if you dip below here, you're providing for some space for you to make your gains back down the road. You might make them quicker, right? Like this. Let's say you bought this and it went straight up. You could take your profit and say, I'm going to wait for the next one. And this happens on a smaller scale. Now, when you break through in this larger scale, let's say you break through here and you're a 1 to 3 month option holder, right? You know that this here is dangerous. You start to say to yourself, well, we're in a danger zone right here. How much risk can I put on before it comes back? And you should start to think about that on a smaller scale. And what this gives a trader is confidence, especially on this large scale. You're like, I have confidence that I can buy here, here, and here, and it's going to work. Now, let's say the one time it doesn't work. Let's say it comes down and never comes back again. Say we crash and it just crashes for the next 5 years. It still doesn't matter because you won, 20 times before then? And you're only risking 10 to 30% at any time, right? And you're only taking these trades. This comes down on a smaller scale. As you get lower and lower, so this is a 1 year, right? So you get to a 6 month. And let's say instead of playing a 1 to 3 month trade you're playing just weeklies, right? So this doesn't actually help right here, but you can start to put in moving averages, right? What's going to happen in 21 days, 10 days, 5 days? And what happens if we start to break through those levels? So if you see a stock or an index that is bouncing off the 10-day average, you can expect, right, that it's maintaining that average. It's in a trend for 10 days. If you see that it breaks through that 10-day, you can assume that it's probably going to seek out the 20-day, 21-day, whatever moving average you're looking for at that next stage, right? And you're going to wait for that stock to touch that 21 and see if it gets a reaction. Let's say it doesn't get a reaction, it falls through. Then you're going to look for the 50-day. Then you're going to look for the 100-day or the 150-day or the 200-day for you to look for a reaction. And when you're trading using moving averages, and we're going to do some, I have some more complicated stuff for you later on, but just for a basic sense of the market and where it's at. You're looking for basic support or channels, basic support and resistance levels, previous support and resistance levels, and you're also looking for stuff to get broken through or trend higher, right? And you're also looking for expansion and contraction of the market. So let's look at this right here, right? We made an all-time new high, right? Let's say we made another one and another one, and we're kind of stalling out here, right? Remember how we trade sometimes and you're like, boy, this market's boring. And this market starts to roll over, right? This is a contraction in the market. And when you start to hear people say, well, we might be sideways and slightly down, right? They're talking to you about this slow rollover period. See that? And as you start to roll over here and you stop making all-time new highs, right? Then you'll hear someone say, expect expansion in the coming days. When they're talking about expansion, they're saying that this is a contraction zone, right? Very small trading range. And the expansion means that we're going to drop, right? And rise. And so you'll see this you'll see this trading range expanding. You'll see this high over here of 4,600, and you'll see this low down here of 4,269. The interesting part, though, is that you'll hear people talk about volume. You'll actually see more volume in these selling down moments, and specifically in this basing. It'll be gnarly. And then you'll see almost like a lightning bolt of green. And it doesn't actually happen in here. It's usually somewhere over here. Sometimes if it's only one, you'll see that lightning bolt. It's over here. Now, this is neat because we're over here right now, right? And so for just a general market idea, we got killed recently. And we don't get killed like this often. So this is a positive if you're a bull. If you're a bear, you want to consider this done. This is unusual. You don't get these pullbacks that often. When they do happen, they destroy banks, hedge funds, institutions, traders. They destroy the confidence of Main Street, right? Main Street USA. So you won't see this stuff often. Every once in a while in a grand cycle, though, you will see a top, and that's what this is right here. Not only do we not make we did make all-time highs here, but the bears do not want to see you hit this 4,800, because what this means if we hit this 4,800 is that the bulls took charge of this defined channel we had back here. So this is a massive fight right now. Same thing up here. When we hit this all-time high at 47.39, this caused a reaction. We had a reaction, and you can blame it on the Fed chair. You can blame it on unknown rates or unknown news, and I think there is some unknown news. But when you see a reaction like this, there's a reason for it that we don't know yet. So on a larger scale, you start to say to yourself, hey, what's the expectation for 2022? And we know the expectation for 2022 is that rates will be increased. We know now that J-Pow is probably going to get the boot at some point. So a bunch of this stuff's being priced in and was priced in back here. But you have to start to think about, like, is the trade over? The trade is over for COVID right now, right? We know that there are shortages. We know that there's inflation. Even if it's not, I still am somewhat in the transitory camp There's some things that have happened in this inflation phase that are unusual. We've never seen the pay rates go up for people. We've never seen people with this much savings going into a downtrend or a recession. We've never seen this much liquidity, which hasn't ended and isn't going to end for the foreseeable future. We have trillions mandated to be spent, even if we raise rates. So there's all these big macro things you have to consider when we start to get down the smaller scale. And you have to consider, right? We didn't make all-time highs over here. And when we did make all-time highs, we sold off. So you have to consider, what does that mean? Are we rolling over for this 2-year trade right here? And eventually, we're going to. Eventually, the clock runs out on the COVID trade heading into 2022, okay? And there are some historical things that say, yeah, but we have the holidays. We don't want to end on a bad year. And that is, to an extent, valid. If the market is going to dump and you do it in Thanksgiving or Christmas, maybe, I guess it's possible. I guess the greed of banks that want to get out before other people is there. And damn the Main Street crowd, right? And so we're all sitting there with guns pointed at each other, but although we're all wanting it to go to this screaming all-time high into the new year, right? So who pulls the trigger first to make the most money to get out? And that's starting to play itself out here. Now, let's just talk about basic support and resistance levels if we want to continue higher. On this macro level right here, right? We made all-time highs here. We made them back here too, right? We made all-time highs, pulled back, pushed up, all-time highs, pulled back, pushed up, right? All-time highs. Notice that we didn't have any sideways trading. We literally made a higher low and then a higher high. Higher low, higher high. Higher low, higher high. Higher low, higher high. So you're looking for those things, right? Higher lows, higher highs. Those are telltale signs that we're not done going up. Now, what triggers these sell-offs? Well, we traded up for how many days? This is the 13th, and this is the 8th of November. So it starts to get risky here. We talked about this in previous videos. We should see some slight pullback and come up. We didn't. We kept pushing. When you start seeing moves like this, there's going to be a blow off, and we're blowing off again down here. So you need to consider this stuff when you start to wonder, like, hey, should I take a long here, Captain Jim? The risk of you taking a long right now is way more risky than allowing this action here to play out or to play the short side in this area. And we'll get into the details here of how dangerous we are, where we are right now is. But what I spoke to you earlier about was higher highs, higher lows, higher highs, higher lows. Those things make a bull happy. They piss off a bear. You know what pisses off or makes a bear happy and pisses off a bull is when you get lower highs and lower lows. And if you're trading 1 to 3 months out, you're looking for those things on a grander scale. When you're trading month to month, you're looking for those things on a smaller scale. Same thing goes for weekly or daily. And we all know that I think you can go right back and find it. I told you when to sell. I think I told you to sell here, or somewhere back here. And I was like, exit all this shit that you have, go cash, and we'll play this market as it happens to the end of the year. And the reason that you're doing that is because what I told you. At some point, they're going to fucking rug pull it off of you. At some point, I'd said I have to find these videos because I said, you're going to call Apple now. You're going to see Apple go way higher, right? And you're going to get trapped and not be able to sell that top. And I know for some of you that did happen this past week. So where we are, or where I am as a trader, I take longs on. I take stock. I invest in stock. I focus on, let's say, Tesla, and I know when it's going up, and I know when it's going down over the course of a year, 5 years, and 3 months, and 1 month, a general idea of where it's going. So right now, we're trading this market by the day, by the week, by the month. Very short, options mostly. Maybe we play some stocks that are don't have a lot of liquidity in their options, or they're cheap to buy, right? or we're selling puts or selling calls. If I own the underlying and I don't care for 20 years and I buy every real dip, that's another whole conversation. People say that they buy stock and they don't care. I'm in Tesla, I don't care, but they buy tops the whole way. If you bought Apple past 2 years or past year and a half, you could have bought every top and you're flat right now. You've gained nothing. Zero. So if you're just an investor, there's the time to buy and there's the time not to buy. So looking into 2022, you're going to be looking for a few things, right? You're looking for, people are going to tell you, like I told you, that tech's not going to go big in 2022. It probably still will, but that means it has to sell off to take profit for it to go big, even if it's sideways for 2022, right? The real trades are going to be in financials because of rates. They are going to be in oil because of inflation and because of the tightening of oil. You're going to find those to be the best trades. You're going to find real goods to be the best trades. They won't be the glamorous ones. You can keep playing Apple and Tesla in 2022. You just have to realize that they're going to pull profit from Tesla. The trade in Tesla was in May. I think the stock was trading at 550 or 650. All those real banks that bought that want out at 1,200, 1,300. They're going to take their profit. That's going to pull the stock back. And they're going to pull, and you're going to have bag holders in there. They're going to be squeezed until they give up, they call uncle, and they sell and drop the price even more. I'll do a video on this one day. I can explain it in a much simpler way. But anyways, the point is this, is that we're at the end of the year. We're looking towards 2022, right? We might have a Christmas rally or a holiday rally. But for where we are right now, we're going to go in at a smaller scale. Okay? This is a 1 month outlook. If you're a bull, the longer we go sideways, the more chance that we're going up. That's just a fact. We had a new high here, and we had a new high here, okay? This is something that the bears did not want to see over here. But on a smaller time scale, let's say this is how I'm trading right now, right? I'm looking on a weekly. So I already know in my yearly that we're going to roll over in 22. The COVID trade is over, and that the inflation trade is on. The even transitory inflation trade is on. I know that the shortage trade is on. People are going to buy those things, right? I also know that tech has ripened up, or a lot of tech has ripened up. We can already see it in stocks like Pins. We can already see it in Snap and things like that, right? So right now I'm in a risk-off situation as a retail trader. So I'm looking on a monthly, and I'm looking on a weekly and on a daily for where we are in the market, right? So I'm going to start to look for certain things that happened, right? We were coming up here. This was just this past week. This is the 19th. Let's look at this calendar down here. Today's the 22nd. Let's look at the 15th to the 19th over here, okay? This is a gorgeous week, by the way, right? We pushed up. We found support, right? You took that support. You can start to define last week where our support was. And you're saying, okay, for this week, I know that we're going this way, right? See, at the 15th, 16th, you could have bought this on the 17th. On the 18th, we got trapped or we got scared, but it still bounced right back, right? Right into the close, into the 19th. We sold off, right? And all of a sudden, we found more support over here. And so you think to yourself, hey, look, I knew last week, the week prior, that this was support. So I say to myself, until that breaks, I'm going to take this long. And so we did. We took it long, right? And all of a sudden, we sold off. And you just have to say to yourself, whoa, shit, we did not make a higher high here. So you start to get scared. And you're like, okay, so I'm going to make this line over here. I already know that this is going on. I'm in my new week over here, right? And when I'm in this new week, there's two things I need to know. We can't break this support. And when we start to contract our trading and we haven't broken support, there's a fair chance that we are going to squeeze higher until we get to the next point that is rejected. So as we start squeezing down here, I'm looking back on last week. I'm also thinking about quarterlies. I'm thinking about monthly OPEX, thinking about where they want this market to be. I'm saying, where is it going to go? Chances are we've been working towards some ultimate number up here, right? And we'll get into how to figure out what these new all-time high tops are on a larger scale. We're in this bigger trading channel. How far do we have to go before OPEX? How about quarterly OPEXs? So you can start to do some actual math to measure how high the next top will be. And we got up here, and this was on the 22nd. This was on Monday. Remember this happened, right? This should have been and should have not been a surprise. We shouldn't have gone this high this quickly. And when we did, this was an opportunity and a point in this whole movement where big banks wanted to take profit. So they did. They took profit. And where did we bounce? We bounced where the rest of these people wanted this market minimum. And we shot back up. And when they shot back up, more banks took profit and sold down into this move down below here, okay? This was the open, I believe, that came into play on, I think this is Tuesday. It was. And you start to see this second resistance level here. So you start to see these things. This is on a weekly or a monthly basis. You start to see we've got some heavy resistance going on. So we're going to put these in here. We don't want to see these break, right? You see this here? You don't want to see these, or it's not, I call this resistance, but you don't want to see these support levels break, right? These are the resistance levels. Sorry, I'm rambling here. But you don't want to see these support levels break. When you see these things break, it's bad. And what we saw already was we saw one break of that support level. We'll scroll out here a little bit. Okay, we're going to go out a little bit more. And you start to see, where did we bounce? We bounced on our channel. So if we're going to start to sell off, you already know that the bears are going to attempt to test this, right? So we're getting close down here again. We know that we tested it. A minute here. We tested this support down here once. We came up, and if we're going to be bearish, what do we want to see? We want to see lower highs, right? And we want to see lower lows, right? Which is what we got today. We got a lower high, we got a lower low. This is not healthy for us going up. And when we closed the day here, we got another lower high. And so when I was on Twitter today, I was talking to you guys, and I was like, this does not bode well for the market. You don't want to see these lower highs and lower lows. This right here becomes a contraction, and you'll start to see this contraction and another attempt to move down. I think that this lines up to tomorrow's economic news and the FOMC. You're going to see this dump down into the open tomorrow. You'll see us ride this trend line, waiting on bad news to dump it, and then to wait for the FOMC meeting for them to announce one important thing. We're going to start rates right now, or we're going to start rates in January. We're going to start rates in March. So you're looking for only one of two things, either rates or no rates. That's really what you're looking for. You'll see some volatility down here, some attempts to drop it, and you'll also be wondering about if the news is known by big banks before it gets dropped. And one key thing tomorrow you're going to be looking for is when the shit news comes out between 8 and 10 a.m. If a bank knows that rates are going to be dropped in the news later in the day, you will see us drop before we get there, or we get really weak. If you start to see us contract even more as we lead up into 2 p.m., it becomes more likely that we're actually going to go up. In the last FOMC meeting, we did that. In the last FOMC meeting, I was on Twitter, and I said I'm buying some hedge calls here. It was absurd that to the last half an hour we hadn't dropped. And to me, that meant that someone knew we were going up. Everybody, the entire market was short or in puts. The price of a call was pennies. I can't remember what we made, but it was stupid. It was like 3 to 5,000%. So we're going to be looking for this into tomorrow. We have our big picture into tomorrow, and you're going to be looking for some form of this major channel that we know being respected until someone knows more than we do. And if they know that we're going down, they're going to dump this market before we ever get to FOMC. And if they know that we're not going down, they're going to make a couple attempts. They're going to scare tactic you. They're going to post news on Twitter, Wall Street bets, any fucking thing you watch, CNBC, you're going to see a fucking kabuki theater. But that don't mean shit. The only thing that means anything is where this fucking thing goes tomorrow. If you see this line get respected leading into FOMC today, it's time to go long. And this is really scary for bears, even though we're doing these lower highs time in here. Bears know we're going to be looking for is the lower highs, lower lows, lower, and look back on that to see what we're looking to do. And we don't see any lower lows back here, right? I don't see a lower low back here, even though we're going forward. So I'm going to start to look backwards for the last one. Okay? I'm going to bring this back out to a 3-month. Put this on auto. And I don't see any lower lows here. So if we start to sell off, I'm going to start to look for a new lower low. And I'm going to put one in. Okay? I'm going to find the last lower low. And surprisingly, it's right there. And there's another one right in here. Now, I have to check the days in here, 11th, 10th. This is the 11th. This is the 10th, right? Where's the last one, right? We had a low. That's not a low, right? It's a higher low, so we're going to get rid of this one. And we're going to move it, right? We had a low. And this was a lower low than the previous, so we know we're going to tag this one. Where's the next lower low as we moved up, right? We were higher, right? This was lower before. So we're going to go right here. And that's our next one right there. So we've got 42.60 or 46.27. We have 45.44.25. We know on a weekly and on a daily that we are in a bearish territory still. We know that our last lower lows were at 46.27 and 45.44. So we're going to get closer on this chart once again. And so what are we looking for tomorrow? We're looking for resistance here moving into FOMC. If we break this, I'm going to tell you right now, this is where we're going, right here. If the news is excellent and we still break this, we'll look for some kind of a grab down below like we did the day before in this vicinity here. So what we can do is we can put a line here, right here, and we'll make this positive. So we'll change the style to a dashed line. All right, if positive news, we could break this low to go higher. We know that buyers are waiting here for a decision or to go higher. Right? So remember this, these lines here for tomorrow. The next thing would be this. Let's say we have positive news. Let's say all the economic news tomorrow is kick-ass and awesome. Let's say someone knows on the inside that we're not raising rates and all that kind of stuff, and we bounce. What are we looking to break through? All right, we're going to start to look at previous days. Where was big resistance? We know we have resistance above here, right? We know that, oh, wait a minute. We know we have another one. We have to change all these. We know we have another one somewhere in here, right around here. You can start to see us. We have another resistance somewhere in here. We know we have another one over here. And these are minor. You could change the size of these because we know if there's good news, these are going to be speed bumps on the way up. Now we also know that right here we sold off. This one right here is where all the big banks are. If these guys aren't long, they are going to be pissed. If they're trapped from down below, this one right here, if we have positive news, these are all squeeze points, but if we get up here, this is it. We could squeeze way, way higher. So what are you going to do as a bull or a bear, right? You could play this down to this support. You get out and wait for confirmation to go lower. If you're a bull, you're going to wait for this line here to be tested for the third or fourth time, maybe even the fifth. And the more you see it tested and doesn't break, the more conviction you're going to have to take long into OPEX. Now, when we take this long here, and all of a sudden everybody's bullish, your sights aren't set on these two numbers anymore. This is where your sight is on, okay? That's 47.40. And we're going to extend past that. You're actually going to do a measured move. I'll show you this later. Will you measure from here to here? And you're going to come back here, and it's going to give you 0.68% or whatever, how much higher we're going to go. That's for another video. But this is what you need to know for tomorrow. When I told you to close, I meant it. When I told you that MMs want to steal money, I meant it. When I told you that they're going to steal, that if you think bulls are going to make money tomorrow at open, you're smoking crack. They're going to bury this thing sideways. There's going to be a decision, and we're going to go way up or way lower. And we know now what we're looking for if it's bullish news and we dip below. And let's say it's bullish news and we don't dip below. You're still going to wait for this push up, and you're going to jump. I'm going to draw this out for you. You're going to draw. Let's say tomorrow we come down here and we do this bullshit, right? We wait, waver, and all of a sudden we shoot up and you go, ah, shit, I missed it. It could still dump. So what you're looking for is, if you're a bull, let's say, you're looking for, bam, right? We go sideways, and then all of a sudden we shoot up, and you missed it. You're still waiting for us to come above and rest, right? Everybody gets their wits about them and then make these moves up higher and higher. If you're a bear, get rid of that, right? Or let's say you're a bull or a bear. And let's say we ride this line tomorrow, and then all of a sudden we start to break down below, right? If you're a bear, I wouldn't take this unless it was FOMC. This is FOMC, right? And they're breaking below. I'd be waiting for this line right here, because this is the demand line, this is supply line. People want this. They might be dumping this to this point, right? All of a sudden, you get positive news, and we're off and running. So if you're a bear, you want to be waiting for either news confirmation, right, of going like this, bad news, we go down, or you want to be waiting for the FOMC. Let's say we get the FOMC, and it's bad news, and it automatically starts to dump, and you missed it. You're going to wait for that one little blip and then grab it down. If you're a bull, you're going to do the same thing. Let's say you miss all this, and it was horrible news. You're going to wait for this, right, this bounce. It's going to come up. We see this all the time, right? And it starts to do this, and then it sells off. So these are the things that you need to start to, on your own, figure out as to where we are, so that you have some confidence into what we're doing. Now let's get into the start of tomorrow. So seeing and knowing all this stuff, what would my expectation be on the open tomorrow? We're going to go sideways. That's what I think. And I'll call that to you. We're going sideways tomorrow. No matter what you tell me, that's what we're doing. And we're going to probably go sideways right up on this line right here until we get the news. We might have some weakness, come back, and then we're going to wait for the FOMC and what the decision is on rates. Or someone knows, right? That's my call for tomorrow. Now, could we go fucking up 90 fucking handles tomorrow at the open? Sure. Can we drop fucking 300 handles at the open? Sure. Can I get this wrong? Sure. But I know that I'm informed to make an informed decision and not straight panic. Now, let's say we weren't in this situation right now. Oftentimes, when we open at 9:30, there will be a fake out. Not all the time. And there are other factors that come in. What day is it? Is it a weekly OPEX? Is it a monthly OPEX? Is it a Thursday before a monthly OPEX? Is it quarterly? Is it rebalancing? Is it quad? triple witching, all this other shit. But for you right now, you just want to have a basic understanding. And when you don't understand something around here in a week or in a day, and you see certain keywords coming up like, hey, are we rebalancing? Hey, is this a quad witching? Ask people. Say, what does this have to do with where I'm at in the market? Because if you only know these basic things, but you don't know what a quad witching is, you can ask. You can ask, hey, man, we've been trending down for this whole month OPEX. Do you know more than I do? What does this mean for the Thursday of monthly OPEX? So you have to reach out and ask people for those other clues. Hey, man, am I missing something in the news? Hey, man, am I missing something in where we're going into the end of the year? And you start to piece together for yourself, and you can start to put blinders on for the news. You can start to think to yourself, how much do I actually fucking need to know about the FOMC? How much do I fucking really need to know about the numbers that are coming out in the economic calendar? A lot of this action back here tells you, it definitely tells you where you should be depending upon what happens, regardless of what the news is. I hope this helps you tomorrow. And if you feel like you're lost, right, start to watch a video like this repetitively and try to make your own support and resistance lines on a chart, specifically an index. I'll get in. The charts are slightly different for stocks, but this one right here, S&P 500, trades a certain way. IWM trades a certain channel. NASDAQ trades a certain channel. If you find one of those, you start with one of those, then you add all three into your quiver so you can bounce between them, and then you add one stock and know it, then more stock or another stock and know it, then you can always go back to those. If one stock's going up or going down from a different industry, right, you can start to understand what you're, or be able to jump between what you're doing. So when you guys come into your openings every day, you should have on your plate a firm idea of what the fuck is going to happen. And I'll tell you what, if you have information like this, we might burn tomorrow at open. We might go to the moon tomorrow at open. But 60 to 70 to 80% of the time, I guarantee you that you will have the understanding or the knowledge of where we're actually going. 7 times out of 10, the market's going to move the way you want it to move. Okay? At least the general direction. You know where your support lines are. You know where you want to buy, right? You can start to figure out way back months, weeks, months, and years. And especially the longer you trade and know this stuff, the more you're going to be in tune with, hey, where are we in the market? What's the probability of us going up and down today, the week, the month, and the year? Hope this helps. If you're really lost right now, I apologize. I probably owe you guys some like basic fucking trading videos. Good night. Good luck tomorrow. And again, happy Thanksgiving.